Hey guys, welcome to my second YouTube video. It's going to be a little bit of a shorter one this week as we dive into why the share market has recently crashed. "2022 has not been good to the share market. In fact, it's at its lowest point since COVID began. The S&P 100 has actually dropped by 9%, and the Nasdaq 100 has actually dropped by 10 to 15%. And here are my 5 reasons why. My first reason is inflation. Inflation is the general price increase of goods and services over time. Now, generally speaking, that is around 2.09% in Australia. However, due to the current situation, inflation is actually tipped to be more than that, leading to more uncertainty. Inflation has led to increased living costs. Fuel has gone up by 4.6%. Groceries have gone up by 5%. So people are investing less to have money for basic things. The second thing is interest rates. When inflation increases, interest rates will increase as the government tries to combat inflation. However, this leads to more saving and less spending and investing. This can cause things such as lower economic growth and less business revenue, which will inevitably reduce share prices. The third thing is COVID-19. The Omicron variant is the most common variant in 2022 and has led to so much uncertainty for jobs and small business owners. This has led to uncertainty in the market, which has led to people selling their shares to have more money in hand to spend in case of an emergency. COVID-19 has also affected the global supply chain. This is due to lockdowns that have slowed down the production of finished goods and also the sending of raw materials. This has led to normal items not being available at shops. The fourth thing is poor earning reports. Very recently, a lot of companies have been releasing their earnings reports, and unfortunately they have not looked good. For example, Meta Platforms, the owners of Facebook, saw their user growth decline significantly. This led to the value of Facebook declining by over $332 billion. Mark Zuckerberg, the owner of Facebook, actually had his individual value be reduced by $32 billion. Another example is Netflix. Netflix's shares plummeted by over 19%. And this was because their additional users for the quarter hit only 2.5 million, which sounds great, but actually last quarter, it went up by 8.3 million new users. And the fifth thing is geopolitical tension. The tension between USA and Russia has increased over the past few months as Russia looked to invade Ukraine. This can lead to oil prices dropping, and can also lead to investors being skeptical about the market. So those are my 5 reasons as to why the share market has recently plummeted. However, this could be a good time to start investing. It is always good to buy the dip. This can lead to bigger gains in the future as you buy stocks and shares that are undervalued. A lot of people have realized losses over the past 2 or 3 months. To avoid this happening in the future, you should do these 3 things. One is to diversify your portfolio, which is something that I've talked about in my first video, Shares for Beginners. The second thing is to stay patient. When you see a dip in the market, it is very easy to want to sell your shares. However, if you focus on the long term, you will still realize gains and appreciation of the shares you invest in. You also want to make sure you have a clear-cut plan when investing, making sure you have clear goals so that you can invest with a strategy. Also, you want to make sure you have at least 6 to 12 months worth of savings so that you can survive if there is a dip in the share price. This brings us to the end of this video. Please like and comment below about how you are dealing with the current share price dip. Are you buying the dip, or are you just trying to hold firm, or are you selling? Also, don't forget to subscribe below to hear more content like this. I'll be making more content on shares and cryptocurrencies going forward. Cheers.